Hey, what's up, everyone? Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
Brian.
And I'm Will.
Okay, guys. Today we're talking about refinances. That's right, everybody. We're going to talk about saving money, how to not only reduce costs on your monthly mortgage every single month, but also maybe reapply it to pay your loan off faster. You know, contrary to belief, everyone thinks that people in the mortgage industry are just salespeople only. But beyond being a salesperson to get you in the home, but we also can help you refinance, but then help you figure out a pathway to pay your house off sooner. Not many people would argue for that being in a sales role only. So I want to talk about that today a little bit. Does that sound good?
Yeah.
So, Jerome Powell and the Fed came out with their interest rate hike. Oh my God, I'm so used to saying it, you guys. I said interest rate hike, their rate cut. But mortgage rates had already kind of anticipated that, and they were lower before the Fed meeting this week.
You know, same thing happened again. Luckily, I have my clients. I love you guys all. And I'm telling you, I love you guys because I appreciate that they trust. They trust that I'm giving them the proper guidance and proper information. I told them, let's not wait until the Fed cuts the rate, because by that time, most likely we're going to see a repeat of what happened last year. Andy, what happened?
Same thing. Mortgage rates were going down. The Fed opened their mouth and rates went right back up.
Listen, right now, we're 2 days into this, and it's like the market has just gone in shambles. It's
reverse course.
Exactly. It's not advantageous to what, personal belief is from people. Oh, they lower the Fed funds rate, so now we should see interest rates go a lot lower. And what are we seeing? It's like, come on, and Brian.
Now we see quite the inverse of that, because what happens is as soon as they said, hey, rates would drop, a week before that, maybe a month before that, we were already saying the market's going to price it in. So when they say rates had dropped weeks ago. So I feel right now that a lot of the consumers are catching barely up to what's happening in the market, where if they've been listening to the Mortgage Heroes podcast, we've been signaling for this for months now.
So can we do a quick little replay? Leading up to the September Fed meeting, we had been talking off camera, like, hey, you guys, they're going to front run this. The market is going to anticipate. The sentiment is all there. The mortgage rate is going to, and the bond market is going to confirm this, that the bond market's going to slide, mortgage rates are going to follow, and then Jerome's going to open his mouth. That's exactly what happened. So the week before the Fed meeting, rates were already ticking down. The week of the meeting, Monday and Tuesday, rates were a lot lower than they were the prior week. And then the day Jerome opened his mouth, you guys had already got people into new refinance escrows. Yeah. You had already locked the loans. And the day that the Fed actually dropped the rate, rates went higher on the mortgage side.
Absolutely. Yeah. It was just, it was pretty devastating, to say the least, because we're anticipating all this positive information. I mean, we've gone 3 years with just rate hikes. And then finally we saw some type of, letdown last year where the Fed funds rate was reduced by 0.5%. But right after that, we started seeing interest rates go back to in the sevens, and this is the lowest we've seen in over a year.
Yeah.
This is the lowest rates we've seen. So it is good. But at the same time, because of all that information that's being portrayed out there, that rates are going to be low in the fives, they're not. It's not. You can get in the fours, but it's going to cost you an arm and maybe a leg and a half, and if it's like, we already see that we're starting to go in a trend where interest rates are going to start going lower. Why not wait? Why pay origination points, discount points to get a lower rate when maybe another 8-9 months we're going to see another refinance boom like we have in the last month?
Well, so the takeaway is, for everyone that we reached before the Fed opened their mouth, you got in and you got a rate, that is now at the local bottom of where rates are going to be for the rest of September. Something's going to have to change for them to come back to where they were just a few days prior to the Fed opening their mouth. So that's the takeaway. That's the lesson in this. If for some reason you missed that window, start the conversation now with the guys, so that when that window reopens for you, whether it's October, November, or whenever the market softens again on the rate side, you're ready, because we have dozens of people now that are in and at a locked low rate because they took the advanced warning that we were giving the days prior to the Fed.
I feel like for buyers and for people looking to refinance, it's not about timing the market. It's about just being in the market, getting your cuts in. If you're a buyer, go shopping, see what offers look like, see what your numbers are looking like. And if you don't find the house you want, at least you're getting your cuts and you know how the market's performing. So when a deal comes around, you already know how to maneuver that transaction. On the flip side, for a refinance, you can run your numbers. You're not obligated to move forward if it doesn't make sense for you. But a lot of people right now going into these later months of the year could use some savings, have been, raising their hand up or waving that white flag that they do need to save money. And a lot of people are going to get that reduction in rates this upcoming
that
couple
relief,
months.
right?
Yeah.
Some people, it's funny because some people say like 200, that's not enough. Okay, it is what it is, Then you have the other ones that are, I don't care if it's 200, 300, I'm saving something so I can put that money to work somewhere else. So if you're thinking like that, that is the right attitude to have. They're always saving money. You could always put it into a different type of investment that's going to accumulate some type of wealth, I know it seems, $200-$300 is not enough, but I'm telling you, with compounding interest, which is the best invention Albert Einstein ever freaking came up with, like, come on now, like we're onto something right there. So
so let's talk about some scenarios that are happening right now as a result of what was done before the Fed opened their mouth, getting people in, talking about saving some monthly money, and then also applying money back towards principal reduction. So let's talk about the case study you have first, Brian. You have someone who's saving over $600 a month right now.
So, I mean, imagine put yourself in a position of somebody that's, doing everything to pay their mortgage payment. How would it feel if you were able to save those $600 a month, skip 2 mortgage payments, and then in a way get some cash back through a refund of your escrow account going into the most expensive months of the year, I'd arguably say.
Yeah.
That's exactly what the Watkins family is doing by utilizing the VA interest rate reduction loan, which is simply just bringing the rate down and, helping the client save some money. But
the scenario was something we talked about in the previous episode. Was they had I saw your notes. They had a 3-2-1 buy down.
Yeah, so I'm glad you brought that up. So the Watkins family bought back in 2022, and at that time they purchased, they got a 3-2-1 buy down. Fast forward to today, that buy down is going to be done here in about a month. So their payment is going to be adjusting for the remainder of their loan unless they refinance. So they're currently paying their mortgage at 5.25% with the buy down, but come November, that's going to change to go up 1% higher to 6.25%.
Wow. So the end of that. So okay, we had given the example of if you got a 2-1 buy down or a 3-2-1 buy down, this may be a window where the market's going to land right at where you might be exiting your 3-2-1 or getting that like fixed permanent long-term rate of the 3-2-1 buy down setup.
Yeah.
100%. So the obstacle that we're trying to get over is that in November, unless they refinance, their payment's going to go up by $611.
Dang, that's crazy. Yeah. So you got them in, then you're doing the VA IRRRL, and you're going to basically help them from that payment increase of $611 a month.
Yeah, so they were motivated on this because who wants to pay an extra $600 on their mortgage?
Exactly.
That, and we had planned this all along from when we first did that purchase, that, hey, there's going to be a time down the line where I'm going to be giving you guys a call and say, hey, it's the time to get out of this buy down.
And here's the thing, and I don't want to be like conspiratorial, but when we talked to people back in 22, 23 saying, hey, the 3-2-1 buy down, take a look, 2-1 buy down, get the seller to put concessions to cover that. Why do you think the banks were offering that? Do you think that maybe they perhaps somehow knew that maybe this would be a scenario that could happen? Gee, I wonder.
Yeah.
Because if they felt that by doing a 3-2-1 buy down back then would result in increased foreclosures now, that's a very risky maneuver to make on the front side of this deal in 2022 and 2023.
Well,
so that's Andy being a little bit biased in the corner here, but the banks aren't stupid.
Yeah.
They know that this was going to be the situation, and guess what they're going to do? They're going to cycle new refinances in, get more loans redone, but then also avert potential foreclosures because people who are going to get that high rate are now going to be able to sidestep it by refinancing now.
No, it's great. I mean, I remember when we were talking about back in 2022, right before 2023 happened, we were saying that banks and investors are going to start getting a little creative with what options they're going to be able to provide to new home buyers to help keep the market momentum going. Otherwise, just people weren't going to be able to afford. And then the 2-1 buy down came, and it was just what a way for people to get into a property and feel like, hey, I do have a comfortable payment. Thank goodness the seller agreed to help me, withstand this type of payment for the next 2 years, sometimes 3 years in your case. And I can't believe it's freaking 3 years already from that.
It's ridiculous.
Time's gone fast.
So my point to the people at home is, does this sound familiar? And are you in a loan that perhaps doesn't fit you anymore, or you're at the coattail of your buy down being done? Right now is the time to take action. Sit down with the mortgage professional, run the numbers, and see what that savings looks like or what your situation and options are.
Yeah. No, this is a great scenario because that time is ticking. I'm going to stop. It's not a ticking time bomb per se financially for people, but it will add extra pressure. I mean, it is a method for there to continue keeping loans cycling through the market in 2022 when it's low, 2023 when it's low, a way for the banks to continue originating money because that's how they can make returns and satisfy their investors. And it's a way for sellers and buyers to agree to terms to close escrows. And so this was a glaring example of the creativity we talked about that would show up and reveal itself, but then also creates an opportunity later because again, they're not stupid. They have to know that down the line, there will be, whether it's 2, 3, 4, or 5 years, somewhere there will be another opening where these people who got these buy downs are going to be able to refinance to a permanent long-term loan.
No, absolutely. It's about being creative with these transactions. You got to really listen to the consumer before they buy. You really have to figure out what are going to be the best options for them. Most of the consumers that are coming in are first-time home buyers. They barely have enough in savings to pay some of the closing cost. That's why you really have to find the creativity and figuring out, does the seller provide you with seller credits? There's times where they don't, and we've been seeing that. There's been a shift. This market shifts so quickly. It's really hard to keep up with it. There was a time where houses were sitting in the market much longer. They still are, but they're not getting many offers in. And now all of a sudden, we're starting to see multiple offers. So you're saying that seller, multiple counter offers, and no, we don't want to give seller concessions. Well, now if you see that the client, for instance, I had a client that got approved and they were at 6.25%, right? They barely have $5,000 for an earnest money deposit. The seller just gave $5,000. What do I do in this case? Now that interest rates dropped to 5.75, I'm given the option. Let's keep it at 6.25%, and let me give you 10, or let me give you 14,000 towards your closing cost.
Yeah,
and then come that when you make your first payment. There's a rule that you have to wait a rescission period of 210 days from when you make your first payment to qualify for a VA IRRRL, interest rate reduction refinance loan. And so at that point in time, you're really leveraging your situation. If rates drop, you just got a $10,000, $12,000, $14,000 credit from the lender to help you navigate through these difficult times and get that money back, that you put into your earnest money deposit. So there is multiple ways that we can get creative, but we have to have all the information in front of us in order for us to be creative.
Yeah.
And I feel this is a great strategy for, anybody that's VA has a rate above 6% for that matter is, this refinance made the most sense for them because it's very seamless. The process asks for minimal documentation, application, mortgage statement, homeowner's insurance, HOA statement if it applies, mortgage note, and your ID. And that's simply all you need so that you can get the ball rolling, get yourself an idea of what your savings would be. And a lot of people think that you need to save at least 1% for the mortgage, for the refinance to make sense. But the truth is, even with 0.5%, depending on the loan amount, it could save you hundreds of dollars a month.
I'm going to put a stake in the ground, guys. To your point, Brian, even if it's not, don't wait for something like dramatic to happen in rate world for you to make the right choice.
Yes.
Because I'm willing to bet right now, at risk of offending you, that you might drive past a Chevron to go get gas at Costco. So if you're willing to drive past Chevron to go get gas at Costco, if the rate drops by 0.5%, you might want to consider that too.
Yeah.
I'm talking to my people. I know, I get it. I understand.
Hey, but I'm just saying 50 cents is 50 cents.
I'm saying the example to prove a point. If you're going to skip one thing to save 40 cents on the gallon over here and you go, oh, well, I'm not saving $200 isn't enough. I really want to save $225. Take the $200. Take the $200. You'll make up the difference somewhere else.
It's a lot more days because these loan amounts.
I know
it's just way more than that.
But this example right here is already helping someone avoid a $611 a month increase that would come at the hands of the 321 buy down.
Totally.
So bringing it back, so the outcome of all this is that their rate won't be adjusted by 1%, and we're going to be keeping them at that 5.25%. After adjusting their new loan amount, closing costs, and all that good stuff, they're actually going to be saving $567, which means that they won't be going back up to that 6.250, and actually will be saving money on their monthly payment, quote unquote.
That's so awesome. That's good because now their payment's fixed for the duration of the loan, and and that's something that I know we're going to talk about in a second here too, which is, well, what do you do now if you have some savings every month? What do you do? But for people who have an FHA loan, a VA loan, even a conventional loan in 2022, 2023, or even 2024, start the conversation right now.
Yes.
We browbeat people about that because of the dozens of escrows that I just mentioned we opened this week and the last week prior. is exactly the net result of listening to that advice upstream 2 steps.
And something people don't know is that if, when you refinance, depending on when you close, you potentially miss 2 payments, you get your escrow balance back, and then that helps you offset any expenses going into those later months. But, if you time it right, you could technically get your refinance for free.
Yeah.
Yeah, there's a way to do that. There is a timing element. There is a timing element to that part, so you can close in time. You have to be very tactical and strategic about that, but there is a way to do it. You can talk to the guys about that. So
yeah, absolutely. It sounds great, and this is what people don't understand is you're always skipping 2 months, okay, when you close in the beginning of the month. So we always encourage people right now that we're refinancing, don't make your payment in October. Okay. The reason being is when you're doing your closing costs, your payment's already included there in the prepaid interest. So it's a misconception that you're not paying anything. There's no such thing as a free lunch. So let's be crystal clear with that. Yeah. So these prepaid interest will be in a box in your loan estimate and then on your CD, and it'll show you exactly. So depending on the day that you close, let's say October has 31 days, but we close on the 15th, we're only going to obtain 16 days of prepaid interest. So that's already like you did make your payment, but it's through your closing cost, right? And then what people don't realize is when you're a homeowner, you pay in arrears. So when you make your payment for October, that's really for the month you already lived in. That was your September payment. Unlike when you rent and you make your first payment on the 1st of the month of October, you're prepaying for the days you're going to live in there. So it's very different. Yeah. Okay. So that's where I want to help people understand. That's how you skip the 2 payments. Yep. Not that you're skipping them, because there's never a skip, but it seems so.
Yeah, it just looks that way. So
it looks that way.
If you're not paying your October 1st payment and you close in October, your first payment is going to be December 1st.
That's correct.
But that December 1st payment covers the days of November.
Yeah, exactly.
Mortgage math, but for regular people, you might understand it a little bit easier by saying it, you skip 2 months, but thank you for clarifying that because it does bring a lot more, context behind what that really means.
It just really gets people to think, well, I have something. There really isn't. Mm-hmm. It's what it is, but
it's not a sales advantage or a tactical advantage that
so we
one
gotta
person
be
has over the
fully
other.
Transparent, right?
Yeah.
It's what it is.
Anyone could do this. It's not just us or the next guy.
Exactly.
Yeah. So
I am special, but not that special.
Yeah. Okay.
So closing thoughts for me on this was, rates and equity and timing can work in your favor, but only if you explore your options. So take action.
Yeah, there you go.
Well, that's awesome. And I want to talk about like kind of this might be a little more of an advanced technique, but this takes a lot of discipline to actually reapply monthly savings towards mortgage balance pay down. So Memo, you gave us an example here of someone who you're talking to about right now that has a $1 million loan, well, $1,045,000 to be exact, but doing their refinance, they're saving a bunch of money every month. And there's 2 ways you've provided here that they can actually pay their mortgage off sooner. Why don't you take us through this?
Yeah, because one of the things of how I look at it, every individual is different. If there's going to be a person that just needs a lower payment, it's very different. In this case, the clients that I work with, they have great jobs, have a great income. So a lot of times they don't like to see, I'm going to owe more on my home. And I tell them, yeah, you're going to owe more, but at the same time, if you apply the savings towards your mortgage, I'm going to show you how to pay this thing off faster, with what you already doing with the payments that you're making. So in this case, the current mortgage is $1,019,000.
Wow.
Okay, so I increased it by $23,000 because their closing costs are $22,758.
Okay.
In this case, it's a high balance loan, so the interest rate's much higher. I offered a 5.5 at no cost, or a 5 1/4 with 0.5% of a cost.
Okay.
Okay, so they decided to go the 5 1/4, and the numbers still work in their favor.
Okay.
So that's what brought the closing cost to $22,758. Now the way I show this to the client is I tell them you're not gonna make your October, November payment. So if your payment's $7,687, you multiply that by 2 for your October and November, that gives you $15,374. In addition to that, you currently have an escrow balance, and you can see it right here on your September mortgage payment, and that's for a total of $7,948. Well, if you add those together, that gives you $23,322. Okay, so if your closing costs are $22,758, the reason why I have to go higher in the closing costs is because they're going to get that money back from their current escrow balance, which their property taxes are due come November, due by December 10th. I have to re-impound that. So I get 9 months right now because of the time that we're on the year. I have to take 9 months. So 9 months of those closing costs of the 22 are in that so that I can make their November payment. See? So what I tell them is you have those funds. If you subtract your closing costs of 22 versus a 23, it's like you still up ahead $1,000. You can use the 23,000 and throw it back to your principal, and it's like the refinance cost you nothing.
Right. Yeah. Yeah.
You know?
And
So
immediately
it
it goes
washes
right
out.
back to what your balance was.
Exactly.
Yeah.
But at the same time, their payment, now that I've increased it to $1,045,000 versus the $1,019,000, their new payment is $7,028 versus their previous payment of $76.87.
Okay.
So that's a $659 difference in payment.
So they're saving $659 a month.
A month, correct. And what I told them, and we'll have it here, we can show it here, but we have this, what's called a mortgage accelerator calculator. Like I said, they're pretty well off. So what I'm teaching them here is I'm telling them, if you applied $659 every month, continue to make the same payment that you're doing, but put in that box on your mortgage statement, I always say it's towards principal, just put that $659 right there. And then what you'll do is you'll end up paying your house off in 23 years and 7 months.
Wow. So they're going to be almost 6 years early, 6+ years
Correct.
early on paying off.
Exactly.
By just taking the same amount of money they're spending now, but then taking that savings you're giving them and reapplying it back towards the principal balance, they'll be paid off in basically 23 years versus 30.
Because we're going back to a 30.
Yeah.
So yeah, 23 years, 7 months, and look at the interest and savings on the bottom left, $248,000 in savings.
Wow. That's crazy. That's a $250,000.
So when you're saying, Brian, the 2, the 3, oh, they're just saving that. This is where it really counts. If you apply yourself in the right place. So if you're looking into, I want to pay I don't care what people say, don't pay it off. I want to pay it off.
Yeah.
I'm a Dave Ramsey fan. I'm going to pay it off.
Okay.
It's I really appreciate you mentioning that, because a lot of people value more the debt that they're actually paying more than the payments are. Like, I'd rather get my debt down as much as possible because I know that I'm paying more interest than I'm even touching that principal. So if you look at a lot of the mortgage statements nowadays, if you look at the P&I, pennies go to the principal.
Exactly.
Thousands go to your interest.
Especially at the beginning of the loan. So in case you're hearing this conversation for the first time, mortgage loans are front loaded. So the first several years of your loan, they're collecting the majority of interest up front, and it progressively becomes a lot less and it tapers off towards the end of the loan. But that's over an entire 30-year period if you have a 30-year fixed loan.
It's the same like when you purchase a car.
It's the same exact thing. In this example though, if their budget is already managing and maintaining that $76.87 a month payment, and you're reducing it to $70.28, their budget can still sustain the payment they're already making.
Correct.
So just reapplying that $659 towards the principal will pay it off a lot sooner, saving almost $250,000 if they did that every single month for the duration of this.
Exactly.
The other thing I find fascinating is that some people choose, I'm already spending that $659 a month. I can add it to what I'm doing over here in savings, my investment portfolio, or whatever that might be in an interest-bearing position.
Exactly.
Even if it's low, let's just say it's at the rate of inflation, but you're adding $659 a month, you're effectively adding nearly $8,000, quick math, and nearly $8,000 a year to whatever bucket that is, year over year over year as well.
Yeah, because of the whole compounding effect too that it has in that.
I like that. I like that point you bring up, and I think a good mindset to look at it is that if you're going to be refinancing, you're going to be saving significant amount of money, you should already plan to do something with that money.
Yeah.
To put that money already to work and try to look at it like you didn't get that money back. It's still in play, but just apply it to somewhere else in your life.
And then a lot of times what I did is I took it even a step further. Since you're already going to not make your October, November payment, and you really don't need those funds, why don't you just save those 2 months and put that in your savings account so that you make an extra payment annually? When we're talking about making an extra payment annually, I went conservatively and I just did a principal and interest. I didn't do the full payment of the $7,028. I just did applying $5,770. That's your principal and interest. So if they did that on an annual basis, they ended up paying this house in 20 years, 6 months.
By making one payment once a year of
extra.
the same amount of the principal and interest they already have.
$5,700.
That's crazy. Oh my God. I just looked at the interest savings right now, $363,000.
Is that it?
That's crazy.
Is that it?
Is that it? Yeah, sure. That's it. Wow, that's nuts.
And so this is the power of leveraging what you already used to if you just apply yourself differently. You know, and that's the difference of how we do things. Again, it really depends on the client you're representing.
Well, and behavior's part of that too,
Yeah,
and
absolutely.
I think and selection, right? Their choice, whether you're going to do a monthly payment or a once a year extra payment, but both can yield the same outcome. Is if you do this in perpetuity, then you'll one way or another end up at the finish line destination sooner than you would if you just carried out an entire 30-year term.
That's it.
That's crazy. And this is, I mean, I know people. I can hear them right now in the comments, like $1 million. Who has $1 million loan? Like in places
San
that are
Diego.
high cost, their $1 million
Hawaii.
loans are common. Oh my gosh, who has $1 million VA loan? Well, there's those too. There's some things that are just cost adjusted based on what part of the country you're talking about. Unfortunately, $1 million loans around here are not that uncommon.
Yeah, well, when the average medium sales price in San Diego is $1,020,000, you know, just that's what it is.
Yeah.
Unfortunately, and you know, we're really looking towards the Fed cutting rates again. We already got an announcement twice they're going to cut. So that's good news for these people that do have these $1 million, you know, because when your payment's $7,000 and change, like, come on, Andy.
Yeah.
You know,
that's a lot of money.
So when we're saving from here, if it's 5.25% and it goes to 4.25%, guess what we're doing? We're redoing this again.
Yeah, you're going to
And then if we leverage the power of what I just showed them, it wouldn't be $659. It'd be more like $1,100 or $1,200.
Yeah.
Let's reapply all that towards your principal. What does that look like now?
Yeah.
So that whole thing that I paid so much during the first year or two, now we catch up because now we're paying it down much faster and putting ourselves in a favorable position.
Yeah.
And that's what all this information, you know, knowledge is power when applied. And this is the time that if you apply it, it's just going to look in your favor.
I really like this. You know, if you're catching this part and you're, you know, wondering if this is a possibility for you, we do have this mortgage calculator that the guys can run with you and also send to you, please. So please, if you need that help, you can either email us or you can put a comment below, and we'll figure out a way to help you get that so you can see what that might look like for your life. Again, you don't have to do this. This is more of an advanced strategy for people who are beyond just needing to save the money, but also then how do I advance my financial position long picture or big picture long term. This is something to do if you have great discipline and you can apply yourself to these habits and these behaviors. There's nothing but savings for you and a reduced time frame on your loan payout.
Oh, absolutely.
Yeah, 100%.
That's awesome.
Yeah. No, thank you.
Yeah.
And, you know, unlike Brian, he asked for documents. I locked all my clients in even before they even said yes. You know, I just took a leap of faith and call to action.
Register the loan, log it.
You know, exactly. we have an incentive going, and that's going all the way to October 1st, Andy. So I want to make sure it was first till September 16th, and they just extended out because the power of the interest rate, you know, market right now. So we're able to take advantage of the situation.
Yeah.
It's okay. We will too. You know, there's multiple ways to get to the same
No,
place.
absolutely. No. And nothing wrong with it, Brian. What I did is, you know, because we're a mega broker, we were able to do these things. When you're working with a bank, you just can't lock loans. If the deal doesn't go through, you get penalized.
Yeah.
In this case, because we're working with a mega broker, it's very different. And that's what I'm going with it.
Yeah.
Nothing against you or nothing what you're doing. I'm not saying how to do your job. I'm just saying I just took that opportunity of doing that.
The outcome's still going to be the same no matter which route you take to get there to
Absolutely.
the savings. And the savings exist because of the size of the broker and also the leverage.
Exactly.
It's the leverage and the size of being able to get rate at wholesale really does help. And you know, people like to think there's no downstream effects. Well, there are. When the bank gives you an incentive and it passes through the loan originator's hands to you, that's a downstream incentive. So
exactly.
The hard way it'd be an uphill climb to see it in any other way. So.
Exactly. And what I'm saying with this right now is these refinances that we've been doing the last 3 weeks, almost a month, is at no cost to the clients. In this case, they want a lower rate, so I gave them that, and then there was a cost.
That's their choice.
Exactly.
Like that's their choice.
But even at 0.75% that we were giving at no cost to them, that's really good.
Yeah.
You know? So just know that.
Well, awesome, guys. Any final thoughts today?
No,
let's
just
keep trucking.
get your refinances in. Yeah, take action.
Take action. Yeah. That's, I think, across the board for all of us. Like, do something about it. Even if you feel like you missed a swindle, like I said before, get in right now. Have the conversation now. Put yourself in a position where when this comes back around, whether it's in a week or 2 or 3 or 5, like whenever that is, make sure you're in and you're ready so that you can like snag the deal when it's on the table.
Exactly.
All right. Well, thank you guys for another great show. Thank you all for watching. Remember to subscribe to the channel, like this video, forward it to someone who you know who needs to save money. And even if they need to save money beyond that by reapplying it towards their mortgage pay down, we'd be happy to help them do that as well. Thank you all for watching the show. We appreciate you. Remember to check out our other playlist called Friends of Mortgage Heroes. We have some amazing guests this year. And we have a couple of cool ones coming up for the fall as well. I got some exciting people, guys, that you guys haven't met yet that I'm excited to introduce to all of you and the rest of our friends as well. Awesome. So thank you guys for a great show. And we'll catch y'all again next week.
All right.
Later.
See ya.
See ya.
So if you enjoyed this video and got value from it, subscribe right here. And if you want to watch another video, click right here.